Ladies and gentlemen, welcome back to the channel. I want to talk about when we can expect some upside in AMC stock and just go over why right now what you are seeing with AMC is so remarkable. Because let's be honest, there is zero liquidity out there. There is nobody that is actually buying stock right now. And this is something that Tom Lee actually shared on a podcast interview. He did it for like an hour long. I can link it down below in the maybe pinned comment or description of this video, maybe both, so you guys can listen to the whole thing yourselves, and I think you should. But it's true, nobody's buying stock, and you can explain the drop in AMC pretty well. You can explain that, you know, we were going through a court proceeding, dilution. But how do you explain how bullish AMC stock has been recently? I think there's an ultimate silver lining here. That was one of my favorite movies when I was younger, The Silver Lining Playbook. This one is a silver lining. Let's go ahead and get into it. Hit the like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comments section. Let me know what you guys think about this as well down below in the comments section. So, it's pretty simple. What I'm about to say, it's not rocket science, okay? Take a look at the QQQ as well as the NASDAQ. I mean, it's been pretty rough the last year or so, last couple of years. What you're looking at here is the inflows and the outflows of the SPY and the NASDAQ per year. So, back in 2019, you had net inflows of $11.3 billion to markets. In 2020, you had net outflows of $7.8 billion to markets. In 2021, you had inflows of $60.5 billion. Explains why the markets did so well. There was a lot of liquidity out there. A lot of people were buying stock. 2022, you have seen negative outflows of $10.6 billion. In 2023, you have only seen inflows of $2.36 billion. S&P 500 year-to-date return is 8.66%. NASDAQ or QQQ one-year returns, 27.41%. So why in the world is the NASDAQ up 27.5% when you have seen 2.3 billion of inflows to our markets? Essentially, nobody is buying stock at this moment in time. People are buying 5 times less stock than they did in 2019. That's wild, okay? That is crazy. I'll tell you why. Something called TINA, it's an abbreviation for there is no other alternative. Well, now there is. There's a bond market that'll pay you 5% if you lock your money up for 10, 20, or 30 years. Okay, you have that. That's not the biggest reason why people are actually not buying stock. The biggest reason why people are not buying stock is because the Fed is not buying assets as well. This chart is the total assets of the Federal Reserve. Ever since they started buying assets in 2007, markets have directly traded based on what the Fed has been doing. So you've basically only seen the Fed's assets grow. Like, there's sure small little times where the Fed's assets will decline, but it's by like minuscule amounts, right? Like couple billion dollars here, couple billion dollars there. That doesn't move the markets. But during periods of which you have seen outflows, which is 2 of them, is 2018 through 2019, and from 2022, back in May, when the Fed stopped doing quantitative easing, until today. Those are the only 2 periods in which you have seen the Fed actually reducing their assets, right? Their bonds. Now, back in 2018, 2019, it looks minuscule, right? Because the markets have rallied more. But this was that period of time. So, you had a pullback in the beginning of 2018 that was about 12%. And then you've seen a pullback towards the end of 2018 of about 20%. So more sizable pullbacks. And then 2020, obviously, you had the Rona. The Fed came in, saved the day, and boom, you're off to the races again. And then what happens? 2022, people are like, hey, the Fed's no longer going to be supporting the markets. And back in March, almost like clockwork, you fell and you only retested those levels recently. Now, the Fed did inject about $400 billion into their liquidity, into the system, back during the banking crisis. But markets realized that very quickly went away. By about June, the Fed was back to where they were previously. And it's been a slide down ever since. This has put a lot of pressure on markets and really a lack of confidence for investors to buy stocks. For one reason or another, the markets tend to follow what the Fed's balance sheet also follows. Now, in terms of just, let's look at some stocks here, right? PayPal and Square are ones that are easy to pick on. PayPal is trading lower than its Rona crash. The Rona crash, PayPal hit $80. Today it's trading at $50, so noticeably under those levels. Back in 2018, Square was trading at about $103 per share before the 2018 crash that we just mentioned. Today, Square is at $40. $40. Nobody's buying stock. Nobody's buying stock. What's happened is money has went out of names like a PayPal, like a Square, quality companies at that, let alone not quality companies. They've really seen their liquidity get drained. And it has flowed into your big tech stocks. So that's why you've seen a 27% rally in the NASDAQ when you haven't really seen inflows to the markets. A little bit, but not 27% rally like inflows. It's because the money has just switched from riskier stocks, more affected stocks to the Fed, and into your big tech names that control the weighting in the index. Now, it's been clear. Apple, Microsoft, Google, these players, they're not going to sell any more or any less iPhones based on what the Fed does. Microsoft is not going to sell their cloud products to other businesses, better or worse, if the Fed raises rates or not. Google is not going to see their advertiser budgets go higher or lower based on what the Fed is doing. They might actually benefit from, a more constrained economy. Now, small cap stocks, they need to refinance debt. They need to raise capital. They get hurt by the Fed raising rates. So that's the dynamic here. Now, in 2024, it's clear. You're going to see some rate cuts from the Fed. Who knows? Maybe more than what a lot of people are expecting. If you take a look at the Atlanta Fed GDP Now tracker, you can see the average forecast from the top 10 and bottom 10 average forecast is for GDP report around 0.8% positive. On the lowest end, you're sitting at about 0.8% negative. On the high end, you're sitting at about 1.8% positive. So there is some wide expectations here, but some people are even expecting a negative GDP report for next quarter. That is wildly different than the GDP report that we just got for Q3, and that was on Thursday. So maybe the economy does slow faster than a lot of people think. Maybe that does mean the Fed is ultimately going to cut rates sooner than we think. And then who benefits from that? Well, big tech stocks, I maybe should have said this a minute or so ago, they also have a lot of money in the bank, so they actually make more money off of their money making them more money. So Apple, Google, Microsoft, these big guys that have a lot of cash, they're making like billions of dollars every quarter based on their interest on their cash. So they've actually benefited a lot from the Fed raising rates. So another reason why a lot of people bought those stocks. Well, who's going to benefit when the Fed becomes easier on Fed policy, more accommodative for the economy. It's your small and mid-cap stocks. Now, that makes you really just wonder what's been going on lately with AMC stock. The broad markets have been falling. AMC stock has actually been rising. Even on Friday, you were down 0.87% in regular trading, up 1.48% in after hours. Now, AMC for the past, I guess year or so, almost a year or so, since about January or so, you have been under this good proceeding that has just really weighed on AMC. It didn't allow the stock to actually do well, because every time you got good news, people are like, hey, dilution's coming anyways. The day AMC turned a profit, didn't even matter. You can't even point that out here on the charts. You should really be able to notice the day AMC went profitable after years of losing money. You didn't. Now, where we're at right now is AMC has already diluted shareholders. It doesn't look like that's going to happen anytime soon. It looks like we've really already experienced the bad here. The business is getting better, and you're looking forward to rate cuts in 2024. More liquidity, more of an appetite to buy stock. I think that sets AMC up in a very interesting position. On top of everything else that's going on, like the new SEC rules that are going to expose the short sellers, it sets AMC up for a big move higher. Now, what I personally think is going to happen in the markets over the next couple of weeks is big tech's probably going to fall. You have the Fed meeting on Wednesday. That's going to be important. You have Apple earnings on Thursday. That's going to be important. You have data as well. On Friday, you're going to get your unemployment report as well as your non-farm payroll report. If you start to get some weakness in that payroll report, once you get closer to actually going negative, or really once you get that big downside miss, for an example, we're currently expecting, I can go ahead and pull it up for everyone. We are currently expecting, is this Friday? Yes, this is Friday. We're expecting this non-farm payroll report to come out at 188,000. If we were theoretically to come in at like 60,000, well, that would be a big downside miss, and that would drop rates considerably. That would raise the prospects of rate cuts sooner. That would probably send AMC stock up 10% alone on next Friday, if that's the kind of payroll report we do get. Now, predicting that it's unpredictable, but we know that is coming. That's the bottom line. We don't know when, but we know it's coming in the relative near-term future. Markets are forward-looking. That, I think, is a big reason why AMC stock has been holding up so well. Now, unlike other stocks, you do have what seems like a constant flow of buyers buying AMC via this community. So once you actually get liquidity into the markets, AMC stock is probably going to rip faces off of these short sellers. Now, short sellers, the data, they say we're like 7% short. I think the SEC exposing the shorts has really caused a lot of them to curl up in a ball, for lack of a better word, and really try to hide some of those short positions. That's me personally. I'm not a financial advisor. I'm not a financial planner. That could obviously be right. It could be wrong. Who knows? That's my opinion. I think the short position is a lot higher than what we actively get reported on. And it coincidentally, once we learned that the SEC was going to expose all of the short positions, who is lending out shares, who is short, how long they've been short, what kind of collateral they're using, the short interest started to fall like a rock. And nothing happened with AMC share price. So just some things I'm observing here. Again, I think money is going to flow out of the areas of the markets like big tech that stood to benefit from the Fed raising rates. And I think money is going to flow into small mid-cap stocks, more speculative stocks that actually benefit from the Fed cutting rates. I think that's the simplest way to put it. So if you're looking forward to any upside within the next couple of months, it's probably due to that, as well as, good earnings or any other, big catalyst that we do get for AMC stock. I could see this sending AMC up a lot. Like $9 could just be the start. And your low was $7.05. 20, 30, 40, 50, 60 plus dollars. Anything's on the table when liquidity comes back into our markets. So that's kind of just how I've been thinking about AMC recently. I want to give you guys an update of this one big thing because I think everyone's overlooking it, and I really don't think you should. The tailwind is now helping AMC, or will start to help a stock like AMC, your other small mid-cap stocks, whereas the Fed just raising rates, we didn't know when they were going to stop. That was hurting AMC. It was hurting small cap stocks for the last 2 years. Now it should start to help AMC and small cap stocks, guys. So that is going to do it for this video. Again, I don't know exactly the timeline. It could be next month. It could be 6 months from now. Some point within the next, 3 to 6 months seems logical to me, minus any other, good news or catalyst that happens with AMC, good or bad. That's obviously going to move the stock as well. But solely based on a liquidity Fed standpoint and the flow of money, that's what I expect within the next 3 to 6 months. So that is going to do it for this video. Hit that like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. If you guys want to come trade with us live in real time, get access to all of the trades that I make. Every single time I make them, I send out alerts and a brief kind of summary behind why I'm making it. Link down below in the description of this video. Come join the community if you guys would like to. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.